Now that you've got all your big Fibonacci reactions and you've got your levels, let's just look at it on the 1600. And I really only want this in the picture. So we've hit that 50. We're creating higher highs. Going into the after hours, here's my low to my high. We start right here at 9 o'clock, and immediately, let me get rid of this one. We immediately have this larger 38 level and this 38 level on a tick chart fib, and they both sort of meet up, and we immediately shoot up off the open 50 points. So this was the level I needed to break. At this point, you know, I would probably be looking for, in Crude on a daily, it goes by 50 points. So if you came in at 9 and we were at 50.08, and then when we broke above this level, and if you really even wanted to be super conservative, you know, you would have had 2 or 3 minutes. But when we break above these previous highs, if that's when you wanted to enter, that would have been fine. So you would have got in at 50.32, and you could have done it one of two ways. There would have been two binaries in play on that daily Crude options. You would have had the 50-50, and then you probably would have had like a 51, because it operates by every 50 points. So you could have went OTM here and got a better price, or you could have went sort of more of an at the money. It still would have been a pretty good price though, because once you broke here at 50.31 and you were trading up to 50.50, I mean, you still would have maybe had like, you know, 40 long, maybe like a good 40 long somewhere in there. I don't know. I mean, I can't go back in time on Tuesday and tell you exactly what the prices were, but I can tell you probably had 2 strikes that were in play on this level one day. You had the 51, and then you had the 50-50. So if you grab this here, if you had all these confirmations, big fib, big level, broke above this level. Where's the other one? Broke above this level, broke above this level. This level was on a 4-hour chart. This level was on a daily or a weekly chart. Remember that we did in the other video. So right here would have been an excellent entry, but honestly, as fast as this was moving, I probably would have waited until we at least broke out of the Keltner on the 1600 chart and closed above these highs, because then from there, I knew we would go off and complete and run. So let's just look at 230. That's when these options expire. 230 right here. At 230, we are trading at 50.86. Okay. So 50.86. So your 51, if you went way out of the money, you would have probably grabbed that once it completed, because you've seen there was a level here that was actually holding the support. So you would have came up here, held this as support, ran up and hit your 61. That OTM would have moved quite a bit, and you know that would have been a good, you would have probably had your 1-to-1 off of that one. So that 51. But if you let that option expire, we do get one more chance. Actually, so close at like 50.93. So close, but no cigar. It closes below 51. But still, you would have ran this up. You would have entered down here at 50, 30, and then got 70 points, and hopefully you would have clocked out by that point in time. But if you went the 50-50 route on that strike, which is right in here, you would have been safe. So you took it right here, 20 points away. I mean, it's probably going to be a good at the money price. You know, maybe 45, maybe close to trading at 50 if you entered above these highs. Excuse me, guys. But you would have been fine, because you close right up here at 50.93. that's roughly, you know what, 40 points above your strike, and that option expires at 230. You would have been fine. So if you got that at, let's just say, a conservative 40 long, 45, let's just say 45. So I put 45 times 5 contracts, it's 225. That's right around my level 1 sort of risk on the first process. So I put up 225. Okay, and then 100 minus 45 is 55. So 55 times 5 for the expiry is 275. Okay, so risk 225 to make 275, not bad, and let that thing expire. There's your first level 1. And then you just work the process. But like, it's pretty neat how you can go back on the 4-hour and just see it. You just see it outside of a Keltner, hopping back in, engulfing candles, engulfing big levels right here on all these charts. You know, you start that week off. How much time do I got? Okay. You start that week off and you got the fib, and you know that's big criteria for a potential reversal. Low or high. That fib's definitely in play. Okay? Start marking some levels off where these candles start to meet. Zoom in on a daily. Inside the Keltner. We're inside of here at the 50, and the lower Keltner's matching up. That's a really good sign for a reversal. We're at the fib. Now I've got cleaner levels that I need to engulf. This one for sure, 49.87. I shouldn't even be looking to trade until we run up here to 49.87. Then I really need to be watching, right? The daily, we're still bullish. I mean, look, we traded down the weeks before. 50 is stopping. And this Monday, it's like, all right, it's staring you right in the face. It's like, are you ready? You could even, look, I mean, you could even put where, you know, that high it almost created was not far from that support level. So you're looking at it trying to break this one as resistance where it's been former support, which is pretty neat. But the daily gives you a great view. And then you start coming down to the 4-hour. You know, start looking at fib targets. Start marking these levels for engulfment. Okay, here's my low. All right, here's my high. Monday's closed. All right. Boom. We take off at 1 o'clock. Almost engulf this level. 5 o'clock. Boom. Sure enough, we come up here. Now I really need this one to open above this big weekly level, and then we're good. And sure enough, right at the open, it does. So, you know, because, you know, this one completes pretty quickly. I mean, you know, the high doesn't really look as clean. I mean, it shows it being a 50 as opposed to a 38. But because these are 4-hour candles, I just like that 38 view. So I just come back to this 50, draw it to this one, and then I've literally got a large 38 level where we've already engulfed the key level. And then this little smaller fib 38 is the pullback. We break above this one. Sure enough, it's time to get bullish. Then let's see. So there's that fib that I just drew. 38 pullback, 9 o'clock. Enter once we break these previous highs. Grab the 50-50 or the 51-50-50. You could have let expire. 51 you would have had to take up at the top, but you would have been well in profit by that point. So anyways, hope this helps. Looking forward to using this criteria. I've got it marked out for Monday, Tuesday, Wednesday, Thursday, Friday. May add a few things, tweak a few things, but yeah, so it should be good. It's going to help kind of hold me accountable and really be able to box in or frame up or whatever, you know, some of these potential level 1 moves.